Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Friday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So for today, we're going to take a look at the overall portfolio. Of course, the value by the metrics, the buying power, the individual holdings. See if there are any deals. See a lot of red right now. See if anything's super overvalued where I wouldn't touch it. Then, of course, we're going to take a look at the watch list and the stocks I have on there and what got taken off and why. Like I said in the last video, stuff gets taken off and put back on sometimes on the watch list. But jumping in today, we are near $53,000, up $280 today, a 0.5%. That 1 week mark, we are up 1,400 with a near 3% gain. 1 month mark, we're actually down 1,800 with a 3% loss. That 3 month mark, we're up $600 with a 1.3% gain. Year to date, we're up 3,100 with a 6.36% gain. That 1 year mark, we are up $10,500, a 24% gain. And then all time, we are up $26,400 with a 99.92% gain. Then we have a buying power of $31. Jumping into the individual stocks, starting off with my favorite real estate company, Realty Income, down a little bit today at $56.87. We have 5 shares, around $280 of market value. Average cost is around $52 per share. 0.5% of the portfolio is in Realty Income. Today we're down $1. Total we're up $25 with a near 10% return. Guys, this pays me every single month. I want to get it back up to that $10,000 mark. That will take some time, but I will get there. Next up, we've got Altria at near $58 per share, down a little bit today, but still up overall. We have 320 shares, $18,600 worth of market value. Average cost is $47 and around 30 cents. 35% of the portfolio is in Altria. Today, we're up $179. Total, we are up around 3,500 with a 23% return. So guys, in all of the tariff, crazy stock market fluctuation, Altria has been doing stellar for me. Up 20% when stocks like Visa, Google, and Apple were all down double digits. Altria is the complete opposite. People smoke more when there's economic uncertainty or bad economics happening or bad news. So I'm not surprised to see the stock up. Plus, it is paying us a nice, juicy $326 dividend that will be buying us a share of Apple. And if I can afford it, squeeze it out of the budget, I will be buying another share of Google as well. So I'll get an Apple share and a Google share this month. Next up, we've got Coca-Cola down a little bit today. Dividend King at $71.64, 15 shares. I need more because I think I have more in merch than I do in stock. Market value is $1,000.74. Average cost is around $61 per share. 2% of the portfolio is in Coca-Cola. Eventually, that might be moved over by the decimal and be 20%. We'll see. Today, we are down $13. Total, we're up $165 with an 18% gain. Guys, I do want to build this up into one of the top 5 positions. I think it'll either be 3 or 4. I think Google deserves to be number 3, but I wouldn't be mad if Coca-Cola overtook it. But next up, we've got Apple down a little bit today at $208.23 and close to my average cost of $218. We have 12 shares, around $2,500 of market value. Average cost is around $218. So still up here, still down here a little bit, but up from where we were. It was down all the way to like 160, I believe, that huge downturn. Yeah, down about to 170, it says. So down pretty big, but overall, we're getting closer to my average cost. Still a good buying opportunity here for me, but I couldn't buy Apple for like 2 years because it was up so high. So I owned a single share of Apple for a long time. So I'm glad that it's down and I'm buying more. I want to be able to get to 20 shares by the end of the year. I think that is possible. We'll see, guys. We've had some medical stuff pop up in our family. We've had puppy stuff, animal stuff pop up. And then we have a wedding, we have a concert, and we have a Berkshire annual meeting to budget for. So, and that's all coming up in the next like 6 months. It's not like tomorrow, but life kind of makes it ebb and flow when it comes to adding to the portfolio, and that's okay. But the goal is still, I still need 8 shares total in order to get to my goal of Apple shares of 20 by the end of the year. Next up, we've got AbbVie at $186. We have 95 shares, around almost $17,700 of market value. Average cost is around $95 per share. 33% of the portfolio is in AbbVie. Today we're up $500. Total we're up $8,600 with a 95% return. Guys, I got a lot of questions as to why I didn't sell out at like what the high of like 220 or like 215, whatever it was, around that 220 mark. Because I want to own the company. I want to own it long term. The only reason that I would sell this company is if management made a huge mess up when it came to like an acquisition or essentially just capital allocation, or if they cut the dividend majorly to the point where something like, say, Costco, maybe Starbucks, would beat it in a dividend capacity, and I think the business profitability would pass what AbbVie's been putting out when it comes to EPS. Again, different business, segments, because one's pharmaceutical, the others are different. But I'm just saying, if a different company could earn me more money for less dollars, then I'd put it into that, right? And as of right now, guys, I haven't been able to find anything in the market that I understand that I'm interested in owning that beats out AbbVie at the price I have it at. So even though it's at 185, my average cost originally was like 80, but I bought more, is around 95. So even though, it looks like I'm still up, but it's not as high as it was, that doesn't bother me, right? That fluctuation was due to market overreaction to the tariffs. And I know the pharmaceutical industry could still be a target for the tariff issue. So it could be sadly it's not a buying opportunity for me, but it's a buying opportunity for anybody who bought around 200. So it needs to drop a lot more for me to purchase it, and I'm great with just letting it ride out, guys. I don't need to own any more AbbVie. It's 33% of my portfolio, and I plan on buying Apple and Google and getting that percentage down from Altria and from AbbVie specifically, just by not adding more shares. But overall, guys, love the company. I love how great it's grown. I love the dividend growth. And like I said, the only way I'd sell out of it is if something economically changed with the business or management did a very bad job of capital allocation, which as of right now, they have not done. I've owned the stock for over, it's like 5 years now. Then, of course, we got Visa, my favorite payment processor. I use it every day. So I decided to put it in the portfolio. I switched it out for T. Rowe Price, and I'm so glad that I did. I have 35 shares, almost $1,200 of market value. Average cost is around $350, so a nice buying opportunity here. 22% of the portfolio is in Visa. So this is in my top 5 stocks, guys, and this is the only one as of right now that I want in that space that is in it, as large as it is. So as of right now, I believe it goes Altria, then it goes, it's Altria, AbbVie, then Visa. Now, I wanted to go Apple, Visa, than Google. So I have a lot of allocation to do in the future, which is great. But the reason that AbbVie is so big is because it's grown so much. The reason that Altria is so big is because I did put a large amount of capital in the company. But when it comes to long-term growth prospects, I think Apple, Visa, and Google are going to definitely overperform and outperform those, being Altria and AbbVie. And I could totally be wrong, but I think long-term that's where the money needs to be allocated to get the best overall return. But overall, guys, as of right now, we're down with Visa, which is good. That means I have a buying opportunity. Total, we're down $400 with a small 3.5% loss. So, guys, this isn't a great value right now, but it is a value, right? So this is one of those cases where it might not be the best place to put the money, but it's still not a bad place to put the money, right? And then, of course, Google sitting at 163. Now, these guys, I'm in a love-hate relationship. I thought that the earnings report would affect the stock, and I was hoping, and again, you can't control it, right? So anything can happen. But I was hoping that the earnings report, it was going to be good, and I understand that. Google is Alphabet, and Google is a phenomenally run business. It's a phenomenal business in what they do. Their ad targeting is honestly, I think, the best in the world. That's why I picked Google over Facebook, is because I think the longevity of Google search and YouTube is in a better overall space than I think Facebook and Instagram are. And I could be wrong, but I just feel like social media changes so much, and I think the moat that Facebook has is strong, but I feel like it's more likely that Facebook is going to lose its dominance over Google. And I could be wrong about that, because there could be more legislation when it comes towards Google because it's so dominant. But as of right now, I think it's the better value. So that's why I wanted to add it, and I want to keep it in that top 5 positioning in the portfolio. So for right now, I have 7 shares of Google, $1,100 of market value. Average cost is right around $180, so still like a $20 upside here for me on Google at $24. 2% of the portfolio is in Google. Today we're up $14 because the earnings report. Total we're down 170 with a 13% loss. So guys, this is still, I think, the best value in the portfolio. Now, Apple was, I believe, when it was down in like the 170 to 165 to 170 range. I do think that's where capital would have been the best allocated in the entirety of the portfolio. But as of today, where the stocks sit, even after Google's jumped up like 5%, I think it was like 5 or 6%. Yeah, like about 6%. I still think here at the 160 range is a better value than Apple at 210. But I want to buy both, right? Like I could go ahead with that $300 and just buy 2 shares of Google, and I'd be happy with that too. But since my goal is to get to 20 shares of Apple, and I waited longer for Apple to be at a better value, I think I need to put the money in Apple. But with that being said, guys, we do have Costco and Berkshire Hathaway on the watch list. Now, guys, I'm about to bite the bullet and just buy Berkshire. I'm going to the meeting in about a week. This is like the 3rd or 4th year I've gone without having a share. I need to change that. So by the end of the year, I'm thinking maybe Christmas, I will buy myself a share of Berkshire. Especially, let's say I do the Apple goal early. Say like I have 20 shares of Apple, and it's usually $200. So let's say I hit that in like 5 months. So it's May, June, July, September. So like if I hit that in like September or October, then in November and December, the money that would be put towards an Apple share, I'll go ahead and put it towards like a Berkshire share. So, and then Costco I want to own because Charlie, and I think that the business is so insanely well run that it's a shame that I don't have it in the portfolio, so that I will be adding as well. With that being said, guys, thank you so much for watching. Remember to hit the like button on the video. It does help. And hit subscribe on my channel. Guys, I've been trying to do the portfolio videos. My tooth was driving me crazy last week, but I wanted to get back into it because I love sharing my portfolio with you guys. So thank you so much for watching, and I will see you guys on Monday with another portfolio update. But keep in mind, guys, I do post content on the weekends. I do shorts content when I can't do portfolio updates. So keep an eye out for that short content as well. But I'll see you guys on Monday. Take care. Have a great weekend.